I think it's hard to know from any one data report whether they fundamentally bottomed. They have some serious challenges. Even this data was confused in the sense that the industrial economy that's gotten the benefit of fiscal stimulus did a lot better than the consumer economy, like autos. And they have some fundamental challenges, demographic challenges, that they have an aging population, and it's going to take a generation to have enough workers to have the kind of robust growth that they need. What I actually think they should take from this is that they should get on with the business of putting in place the reforms to make sure that the economy can stabilize and can produce at a steady level. They can't continue to come in with injections of stimulus to get things going every time things slow down. They need to have a much more sustained and sustainable growth. And for that, they need to open their markets. They need to free up intellectual property so that it is not risky to bring your intellectual property into China. They need to do all the things that we tried to do. I'm happy to say that the one thing that was a big problem during our day that is not a big problem today is the exchange rate. We did our job owning with the Chinese, and that policy changed. I hope that coming out of these negotiations, there is a settling down of the trade tension between the United States and China. It's not good for China, it's not good for the United States, and we're the two largest economies of the world. It's not good for the global economy.
There were some headlines earlier today about the possibility of a trade deal as soon as the end of next month. As and when or if that materializes, on that point you just mentioned on intellectual property, do you really think there's going to be genuine progress, meaningful progress that's enforceable and lasts?
So I'm going to wait until I see what comes out of the negotiations to pass judgment on it. I am skeptical that there are going to be the permanent kinds of systemic changes that we all would like to see. But I actually think incremental progress would be a good thing as well. I think the problem is it's coming at a high price. The mode of engagement that we now have with China, but also with our closest allies like Europe and Canada, is creating this conflict between the United States and the world, causing uncertainty and I think slowing down the confidence that you need to have sustained growth. So I wouldn't criticize incremental progress, but I would say that this isn't the right way to get it.
What about the idea that it's short-term pain for long-term gain? All of these tensions should eventually lead to fairer terms for American business when we're doing trade and when we're operating abroad.
There is no question that we have to be tough with China. I actually think we were tough with China, and that's one of the reasons they changed their exchange rate policy. The question is, how do you build a relationship between the two largest, most powerful countries in the world, and do you do it in a way that leads to greater economic and geopolitical stability? And the way we've engaged, to me, is at a very high price.
Last time you were with us on this particular show, Mr. Lew, was July 2018, and we were pushing you quite hard because the GDP growth was soon to hit a 4% handle or in and around that level, and you were saying that you didn't think the tax cut was the right strategy. As the growth rate has slipped, do you feel vindicated?
Well, I've been saying the same thing for the last 2 years. Potential GDP is not going to go from around 2% to 4% on a sustained basis. You can put fiscal stimulus into an economy and get a short-term reaction, and that's what I think the increase to a little over 3 was. It's now settling back down. I think the challenge to our economy is that we're in the 10th year of recovery. I hope we hit a record. I'm proud of the fact that I had a hand in the first 7.5 years of the recovery, of this growth period. And we're doing a lot of things around the world that I think put at risk sustained growth. There's nothing on the horizon that I think will cause a recession, but I think policy is working in the opposite direction, and that's a problem.